The money that's come to India today for the last 3 years is hedge fund, short term, no concern for long-term returns in India at all. Tomorrow, if they can sell their mothers, fathers, brothers, wives and make money, they'll do that. They're trading. That's why they sold in May, June. It was not the pension money that came in, it was a hedge fund money that went out in anticipation that the pensions would take the money back from the hedge fund because of interest rates going up. So they were not the hedge funds directly who put money into India. They had given it to people to play around the world, if you will, to experiment what they could do with it, the hedge funds. One day they buy gold, one day they buy oil, then they buy copper, then they buy nickel, then they buy India, then they buy Russia, then they buy anything and they sell anything. Their time horizon is very, very short. Nothing wrong, nothing bad, nothing good. But does India want short-term money? In my opinion, no. We want that Los Angeles Police Department money because it will stay with you for a really long time. It takes them 3 to 5 years to decide to give us money. Once they give us the money, I'm not saying that they, or people like them, it stays with us for 5 to 10 years. It doesn't worry about quarterly returns. It will not ask the sort of question that you just asked, sir, about short-term underperformance of the index. They want to see how have we managed money across cycles. What is the risk we've taken? What is the process we have? What is the thinking that we have? What's the rationale that we buy or sell? Very happy to say that I think Fortune magazine finally wrote something that we have been very concerned about, which we tell our FI clients. Population poverty. Very concerned about that. 300 million people in this country who are absolutely poor. Absolutely poor. The cost of looking after them belongs to all of us via the government. Those who have money have to take care of those who don't have money. You know the cost of living in India for the last 3 years, what's happened. So imagine for 300 million people, which is the entire population of USA pretty much. For that number of people, they've got no clothes, they've got no house, no access to doctors, education, hospitals, nothing. Imagine that for the next 20 years, you have to help them get up the economic ladder. First by building schools, colleges, homes to live, power to give them free, diesel free, kerosene free. That bill's being borne by all of us, whether you call it a service tax, a road cess, an extra tax for corporates, whatever you call it, we have to pay the bill. That's a huge drag on the economy. And this again shows the power of foreign money. Foreign activity, $35 billion since 2003. Local mutual funds, all of us presumably, $6.3 billion. It's a ratio of 5:1. $5 of foreign buying, $1 of Indian buying. So what happens when the foreigner sells $1 of his money? Maybe we'll put $1 more and it'll be equal. What if the foreigner sells $2? Finished. What happened in May, June? $2 billion is sold, $200 billion loss in market cap. Thailand, December 9th, $699 billion was sold. I didn't do anything. Power cut. $699 million was sold, $23 billion loss in market cap.